All right, everyone, welcome back for another episode of Carnivore Trades. Today is Tuesday, June 15th, 2021. Another choppy session on Wall Street. Spiders down fractionally, about 0.2%. NASDAQ down 0.7, Dow a 0.25%. So markets giving back some of the gains from yesterday. You saw this epic short squeeze into the close and seeing some typical OPEX action. Every time there's a push higher, it's this candle. It looked like we were going to squeeze in the close, then they pushed it right back down. Yesterday, we had the squeeze into the close, and then we gapped higher and sold off. This is typical. It's a very whippy action. Institutions play a lot of games, and they try to get the retail investor to buy into false signals. So overall, generally pretty quiet day. Spiders again with pretty light volume, although better than yesterday. We did have some nice selling. In the AM session, we're at 39 million currently. But the main point in this video I would like to make is that, so I'm expecting probably sometime next week, I would think, probably after OPEX, we're probably going to get a spike in volatility. If you guys saw my tweet earlier, I said we're probably going to get a spike in volatility sometime in the next week or so. And then we'll probably have the what I call like the annual 4th of July rip your face off rally. And it pretty much happens every year. It's just one of those things where you have the shortened weekend, you have the summer trading volume, or excuse me, the long weekend, the shortened trading week, the light volume, the institutions taking off early on Friday, coming back late Tuesday. It's generally just bodes for a really buoyant market and really the whole month of July. Typically we also have lots of volatility in the very end of June, really like the last week or so before the 4th of July. So seasonally, actually I can show you there's some good charts, and if you haven't heard of this site, Equity Clock has got some great seasonal charts. But typically July is a very bullish month. This is a 20-year average of the S&P 500. We typically get the dip in late June, and then July there's the rally into that. This is the post-election year seasonality, the blue line there, and then the pink line is the average year. But you can see like a dip in late June, and then July is generally pretty bullish. Now, I talked yesterday about August being a pivotal month, A, with yields, and B, with the Fed meeting. And I spoke about this on Twitter. If we get a spike in volatility this week, depending on where it goes and how high it goes, I might just sell into that, even if I have to take a loss. So I just want to give you guys a heads up, because I don't want to get stuck holding volatility all throughout July if we're going to melt up, and I can always just buy it back cheaper. So I've been talking to you guys about how I think there's going to be one more push lower on the VIX. I think that the bears are very close to capitulating, but I think we need to push the VIX lower one more time in order to get that to happen. If you look at the spiders here, this is not a blow-off pattern. This is a blow-off pattern. See that move that we had in August there of last year? You can actually see it better on the Qs because they were even more extended. Look at that. Look how extended they got. You got this hanging man candle. It's the end of August. So we're not quite extended enough yet to me. I mean, we're making all-time highs and the volume is light. All the signals are there, but it's not. I want to see this go, parabolic. I want to see a blow-off move. But there are a lot of signals that are catching up. For instance, the Skew Index has now taken out the August 2018 high, and if you are familiar with that, right before that basically preceded the crash that we had in 2018. So this was, there we go. So there's August 13th. We had a little bit of a top. A little bit of a rolling top there, and then we rolled back over, and we had that crash there into Christmas with that bloodbath. But anyway, so we're seeing the Skew Index get out of control. The put-call ratio is, very, very low. Let's take a look here, actually. I'm going to look at the NYSE. Yeah, 0.43 again, and I think the industrials was pretty low as well. Yeah, 0.48 on the, oh, it's 0.39 on the industrial. So, yeah, just there's no protection being bought. Funds are scared to be short. Um, and nobody wants to be the next Melvin Capital that gets absolutely blown out. So you have bears that are running for the hills, and with the margin debt at record levels, all it takes is one air pocket and one fund to go under, and there's going to be nobody to support this market, because that's the thing that short sellers, that's the function that short sellers provide. They provide that cushion. So if I'm short here and the market rolls over, I'm taking profits here at 400, and then I'm going to take profits again at 383 or whatever this pivot is here. So that prevents the crash from happening. But we're in a precarious position. So definitely want to be careful here. Now, I say that I may exit the VXX. I'm not sure yet. I have to see what the chart looks like when we get there. If we break this trend line on the spiders, if we break this trend line on the diamond, I may be inclined to hold it, but I have to see what happens. So, but I want to just give you guys a heads up there. And it's up to you whether you want to hold it on. I don't know what you guys' averages are, or if you're in the trade with me or not. But just want to give you a heads up, just so that I'm not like being misleading to anybody. So, but even if I do exit it, I'll be looking to get back in probably late July or August. But yeah, thanks again, guys, and keep giving me some feedback. I got really good feedback yesterday on regards to like the subscription services and what you guys want to see from me. But I just want to get some more of it. I'm probably going to talk about it for a few weeks until I can get kind of a consensus. But it is something I'm looking into. So thanks again for interacting with me in regards to that, and thank you for all the feedback on the gold video. I put a lot of time into it, so I'm glad you guys like it. All right, guys, anyway, take care. Thank you again, and we'll see you later.